Hey guys, hope you are doing well. Welcome back to our channel. Today we are going to discuss an important concept in accounting, which is a financial statement. This is the basic and more important concept in accounting, where all the concepts practicals deal with this financial statement. So today we are going to discuss in detail about what this financial statement, what it deals with. Before memorizing just a meaning and what it does, let me clearly understand what is the meaning of financial statement and what it does in its nature. So, the meaning of financial statement, a simple meaning to understand, not to memorize. The basic is to understand the meaning first, what it actually does. So, this is an important concept in accounting where which is useful to learn practically, understand practically for your career. So, financial statements are the formal records that summarizes a company's financial performance, financial position over a specific period. This financial position that summarizes the records of the company to show the financial health, financial performance, financial position of the company. What the company actually undergoing with its financial health. This will help the stakeholders like management, investors, auditors to understand the company's profitability, liquidity, and overall financial health. So, in simple terms, just to understand what is financial statements are, these are the formal basic records which show the company's financial health, financial performance of the company for over a period of a time. In short, financial statement which shows the company's performance financially and what it owns during a particular period or a time. So, what it owns and what it owns to the others. So, it shows the financial position, financial performance of the company. So, this financial statement includes the main three core financial statements. These three statements are very important to analyze the financial health of the company. So, income statement, balance sheet, cash flow statement, statement of changes in equity. At last, we go for a changes in equity, but the three main core concept which is more important to understand and analyze the main financial statements are income statement, balance sheet, and cash flow statement. So, in upcoming video, we'll go through a in-depth meaning concept of income statement, balance sheet, and cash flow statement, and also the PL account, the difference between a smaller difference, a gap between income statement and PL account, and usually we say it as an PL account only. So these are the main financial statement. Okay, so we'll go to the next concept. Yeah, this is the elements of financial statement. What does this financial statement actually includes of? It includes of balance sheet, income statement, and the cash flow statement. So the statement of profit and loss, that is an income statement. Income statement is nothing but which shows the financial performance of the company. Okay, which shows the financial performance, what the company actually go through the day to day activities, what they are going through with their income, expenses, etc. So actually this income statement includes of income and expenses. Income we categorize like increase in asset, decrease in liability. Increase in asset means like what we say, what company owns. Decrease in the liability, what a company owns, means which a company pays to others. Leads to increase in equity other than contribution from stakeholders, shareholders, means which if an asset increases, equity increases, liability decreases, a company decreases its liabilities, it decreases its expenses. So expenses, decrease in assets, increase in liability. Where a company has more expenses than income, it decreases in its assets, increase in liability. Where it has a more liability, which it has a responsibility to pay to the others more, it owns more liability, leads to decrease in equity other than distribution to the shareholders. Where shareholders distribution decreases, okay, decrease in the equity, and the company pays to the others, outsiders, a liability increases. So basically, statement of PL account, income statement shows the income and expenses of the company, which shows the financial performance what a company undergoes. Next, balance sheet. Balance sheet is nothing but it shows the financial position. Income statements, which shows the financial performance what a company actually does in the day-to-day activity. This balance sheet shows the financial position, actually what a company has undergone, what it has to do for its increase in a position, or what it has to deal with to face its decrease in their financial performance or a financial health. So what this balance sheet actually deals with, it shows the financial position, and what it actually includes in the sense assets, liability plus equity. And there is also an accounting equation for this balance sheet, is that assets equals liability plus equity. This is an fundamental accounting equation. In upcoming video we will discuss in detail about that. So what this actually asset includes of a present economic resources. Present economic resources are nothing but something valuable business has a right, like cash and cash equivalents, bank balances, etc. Controlled in the sense which a business has a power to use, like we have taken a loan on installment, we has a power to use the machine because we pay the installments, and in future will be acquiring it on to the own purpose. Past event, the asset arises due to something already happened, means the which is happened already, like we have purchased already, or we have already owned the ownership. Future economic benefit, which we will be earning an income in a future purpose, like in investment, we invest today but will get our returns in a future. So future economic benefit. Liability, present obligation, where a company has a duty to pay to others. Past event, payment due or liability, like bank loans, borrowed loans, repaying loans, etc. Transfer and economic resources, repaying and settlement of liabilities, like repaying to the others. Equity is nothing but a owner's share. Residential interest in assets less liabilities, means like after paying all the liabilities, what remains with the shareholders after paying all the liability, what a company owns is an equity. So in simple, balance sheet is nothing but which shows the financial performance of a position of the company. So income statement, which shows the day to day all the income and expenses what a company faces, means a financial performance of the company. But balance sheet picturizes the financial position, where this will help an investors outsider to know the what a company as its position, like it presents the financial position of the company. And third one important is that cash flow statement. Cash flow statement is nothing but it is an which deals with an asset, like only with a cash transaction, it is on the transaction only takes basis on an asset, like a only cash transaction. The movement of a cash inflow and outflow will monitor in this, and this categorizes into three concepts. In upcoming video in detail we'll study about the what this actually cash flow statement includes, of what are the activities it deals with. So in simple to understand, cash flow statement is nothing but which deals with the cash transaction. The transaction only deals with the cash basis. So cash inflows and cash outflows. So these are the three main elements of financial statement. So I have covered all the theoretical part of this financial statement. In upcoming video I'll be discussing more about a practical, what actually a PL statement includes, what a balance sheet includes, what the cash flow statement deals with. So thank you for watching my video. Please do subscribe and support to my channel. Thank you.